welcome to Geojit Spotlight. The Indian auto industry is experiencing remarkable growth and is attracting many investors to automotive stocks. Today we have Saji John, research analyst at Geojit, joining us to discuss the sector's outlook and highlight the potential investment avenues. Welcome, Saji.
Thank you.
So let's start. Saji, what's the current outlook for the Indian auto industry? And during the festive season, do you believe four-wheelers are more appealing than two-wheelers and have supply issues normalized?
Two-wheelers and four-wheelers, actually initially what we have thought is that, the beginning of the physical year, we thought that the situations got a little bit skeptical because of large base of last year, high base of last year. Now, what we have seen is that, the demand for the passenger vehicles and the two-wheelers is to be normal for the physical year. However, we are seeing that the passenger vehicles have done outstandingly well because of the high base, because of the utility vehicles sales has been outstanding for the first half of the physical year. What was supported is that, for the PAT to grow for most of the companies is that because the raw material price for the companies have come down substantially, which has led the PAT to move up, and the valuation was supportive for these companies. If I talk about the supply side, the supply has been it was on the it was on the elevated side because of the the shortage of the semiconductor was there. So now what the companies are saying that it has been completely, normalized. So, there was a lot of bookings for most of the companies and that got delayed. Now they have been, the companies can make, deliver the vehicles on time. On an expected lines, what we are seeing is that, the second half could be normal, especially for the passenger vehicle. As I said that because the last year, the base was very high. Though the utility vehicle demand to continue for the the second half of the physical year also, especially for the passenger vehicle. The last year the passenger vehicles have delivered a growth of 27% year on year. When we talk about the two-wheelers was on the below expectation line because of the rural demand was not being picked up to our expectation, because there was unseasonal rainfall and the cost of the vehicle had substantially gone up because of the change in the regulation. If the new vehicle, as you see, it is cost somewhere around 40% because of the change in the regulations. So the affordability factor of the rural was on the muted side. But when you talk about the urban sides, urbans have shown a great growth because of the woman workforce coming into the participation has led the unisex vehicle like scooters have shown a lot of tremendous growth in terms of the volume. But what we are seeing is that but what we are seeing is that on the second half there was an export lag in the first half, and the second half that going to show some kind of pickup. So this export could be likely to be better for the second half. Not only that, there is a ramp up in the EV sales. The EV sales also came down post June because of the government reducing the subsidy. So that is also started showing some kind of improvement. So, and the new launches the companies have been laid out for the second half is also impetus for the most of the companies. So what we are seeing on the overall, what we are seeing is that the valuations looks attractive though. But we are saying the stock has completely rallied up compared to the broader market, because around 24% it was outperformed the broader market. So what we are seeing is that it is like it's a buy on dip strategy. So you should have so now the true winners will be the companies who can have a product differentiation in their catalog. So so that is the thing that we have to be going forward we'll be focusing on.
Okay, looking ahead, how do you anticipate the growth of electric vehicle and what challenges are anticipated?
So the growth in the electric vehicle, as I said, because initially it was it was going really well. 1 lakh of vehicle was able to, companies can sell in a month. Post May, when the subsidy came down, like they have been 50% dropped in the month-on-month vehicle sales, which has now improved to 75,000 in the last month. Now, what we are seeing is that there are a lot of headwinds that we are seeing in the EV ramp up because, now 94% of the people are using their home charging facility they are the home charging facility which they have. The sale is largely coming from those segments. Now, the participation from the rural is very lower because if I talk about the average cost of the vehicle is somewhere around 1,34,000 to 1,56,000 as per the model variant. And the major cost, what is taking by the battery cost, which is now trading around $134 per kilowatt hour. So now, if you want to run a scooter, minimum 4 kilowatt hour is required. So around 30, if I calculate, around 30 to 40% cost is coming by the battery, and 20% additional will be coming for the battery management system. So it's like around 60 to 65% which is the cost. So the companies cannot negotiate much on the cost because it is something product it's all more about technological things, so you cannot compromise. So, and other fact, the headwind is that we are importing most of the battery from China. So the cost is something which is already given to us. So so what we are expecting is that the companies are trying to bring below 1 lakh price range so that they can attract more of the rural customers, because rural participation is very lower. Now, as per the given deadlines, we are far below from that. Now, overall sales, if you see on the October sales, only 5% of the EV has been contributing from the overall sales, so which is very lower. So what we are expecting is that there are a lot of backward integration which has been done by most of the companies to make in-house manufacturing facilities, like the companies like Exide or like Amar Raja, and even the OEMs who's also doing a backward integration in terms of better battery, economic of sale in the battery price. So so what we are seeing, there is a lot of potential which is there in the segment, and the transition which is likely to happen very soon once the rural participation is coming into the foray and the cost of the vehicle coming below 1 lakh.
So, how is the adoption of electric vehicles progressing in the Indian commercial vehicle sector? And what challenges and opportunities does it bring for manufacturers and operators?
So, if I talk about the commercial vehicle, definitely there is a demand which is there, and it is largely driven by the government's infrastructure projects. So, but during this demand, there was the escalation in the cost which was there because of BS6 transition, and the average cost has gone up substantially higher. So it is not affordable for fleet operators to run the business. So it has affected their profitability. But what we are seeing is that for a company, it was really helpful because they were able to bring down the cost because of there was a benign raw material price, because the raw material price came down, and that was supported the companies to have a better margin, better economics of scale in the cost of the vehicle, and that was helpful in margin expansion. Second thing is that what we are seeing on the there is a EV transition which is also there in the commercial vehicle segment, which is where you can see is that the commercial vehicle segment constitutes a larger portion in the pollution area. So the government's intention was very clear. They want to make the bus segment, which is around 30 to 40% of the commercial vehicle by 2028, to be electrified, and whereas 70% to be electrified in the bus segment. So to fulfill that, the government has taken a lot of initiative in terms of e-bus services, where they have recently allotted around 10,000 vehicles, where the cost for the tender is also increased to 2 crore per vehicle. And another thing that we have seen is that there are a lot of multiple orders coming from these state undertakings, which is also helpful for the new players to come for the tender opportunity. A stock which I like to highlight is Electra Green Tech, which is in our coverage. So that's the company is one of the largest manufacturer in the EV bus segment, with the collaboration with BYD. So what we are seeing is that there is a lot of potential what we are seeing in the e-bus segment. There are companies is also coming with e-truck segment, which is for the tipper carriage. If you see about the growth, is largely coming from the medium and heavy commercial vehicle segment and the light commercial vehicle segment. So there also we are seeing a lot of potential for the companies to come with e-bus services, e-commercial, e-truck services, and the e-LCV service, e-commercial, light commercial vehicle services for the e-commerce services that we are seeing, last mile delivery. So there also we are seeing a lot of potential coming for the commercial vehicle. So this is more about what we are expecting is that how much it is viable for the the fleet operators to use, not only the fleet operators, also for the bus undertaking. Because if I see 85 rupees per kilometer when we run by a CNG, which is much lower when you come to electric buses or e-truck segments. So I think there will be a lot of potential for the fleet operators to look into this opportunity, and even the OEMs is also providing a better ecosystem so that they can improve the profitability by providing a better infrastructure facilities, the in-house infrastructure facility for these buses. What is the headwinds that we are seeing is that the commercialization of the buses and the truck segment is it can be possible only when we have we have a better infrastructure facility, and that is something which we are lagging. And I hope that the governments, the new e-seva bus, EPM Seva, where the government has allowed 50,000 crores, in which after 20,000 crores, there are most of the 20,000 crores being allocated for the infrastructure facility. I hope that we will be able to, we can see a lot of impetus in the commercial vehicle segment going forward.
So the last question for the day. What are the emerging trends in the auto ancillary segment, and what are the top picks in the sector?
See, the emerging, what we are seeing in the auto ancillary sector is that who could be the true winner. How far that you can adapt to the EV ecosystem or EV agnostic kind of content, then those companies can could be the true winners going forward. Not only that, there is a lot of capacity acquisition, capacity expansion which is being going in the sector, and there is also inorganic and organic opportunities are being used by the companies to expand their portfolio. And because there is a China plus one strategy that we are seeing, that most of the companies are here to expand their capacity, because they have to expand their capacity to meet the future demand, because since there is a China plus one strategy. So, that is the one thing. So you will be seeing a lot of capacity, and the depreciation going up, the fixed cost is going to go up. But what we are seeing is that the future for these companies are very good because of the superior product mix that they have and the product differentiation they can bring into the segment. Not only that, now exactly if you take the total content per vehicle has come down significantly lower. For a scooter, for a two-wheeler, if I see only 11 components is required, because it's like a motor and controllers. So when you compare with an IC engine, so here what we are seeing is that those companies can bring the changes, and they can have a product differentiation with a lower cost and have a better agreement with the OEMs who are likely to benefit going forward. So what we are seeing is that we expect that it will be too early for the companies to come and like how the profitability gone up especially on the auto ancillary segment. And not only that, we are expecting that the small players who have the better room for expansion is likely to be a beneficial, like what we are seeing in the CI automotive or the who have the better capacity expansion projects which they have. So that is the reason that we expect that a lot of consolidation is also likely to happen in the auto ancillary space. On the top picks that we are seeing is, especially on the OEM side, we are positive on Tata Motors, Mahindra and Mahindra, and Electra Green Tech. On the auto ancillary space that we are seeing is CI Automotive and Uno Minda and Bharat Forge. So these are the topics in the auto and auto ancillary space.
Thank you, Mr. Saji, for joining us today, and we truly appreciate your time and expertise.
Thank you.